All right, ladies and gentlemen, I hope you had a wonderful day. The stock market went absolutely insane today, and we had one of the worst days in years for the S&P, the Russell, and even the Dow and NASDAQ. They kind of held their own, but they've had other worse days, believe it or not. But surprisingly, a lot of volatility came back around today. The VIX even went crazy for a little bit, and it was all due to the CPI. And now one of the biggest things related to this whole no landing, soft landing narrative, it has finally got called into question. It was all very minor, but today's reaction was actually very big. So we're going to talk about all of it. The point is, the market, the rally, we've been hitting a lot of all-time highs. We got seasonality on the way. Everybody is asking what happens next, and that's why down the road, you still got a couple more data sets, even some along the week, man. So, Chad, what I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thisstockmarket. We are live every day, and we have earnings plays. We almost had like another 5,000%er off of $20, and then I don't know. It's the earnings trauma, Airbnb. There's a lot, anyways. But we are going over all of the earnings. We still got a couple more this week, so we are doing all of that live. So hopefully we see you there. But run it, baby.
Walking to the couch, it's a 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, we have to talk about this CPI and what caused this reaction. I do think a lot of things moving forward, where the market goes from here, all of those things are going to be very important. But right now, you have to really understand what happened today, because it's not like the CPI number came in 1% higher and everybody's worried, oh my gosh, CPI's on the rise again. It's not like we got that type of print, but it came in higher than expected. Remember, yesterday we were saying how everybody pretty much expects it all to be the same shape and coming down. Well, that did occur, but the way that it happened in all of the groups, what we saw with services and houses, that's what brought about this reaction today and got people worried. And realistically, what we saw today, was it just the CPI? Yes, that was the trigger that set it all off. But keep in mind, you just had an extremely strong jobs report, and there was a lot of other data all the way down from consumer to earnings, even some of the wage data that people have been getting as a good sign. Well, here's the deal. All of this stuff was fine as long as inflation was coming down. So now that you got this inflation kind of showing that inflation is more so sticky at a level that's above 2% and it's still not coming down, that is what got everybody nervous today, and that really dented the armor of this whole narrative that, yeah, well, jobs are fine as long as the inflation is low. Any sort of soft landing, no landing narrative you could think of, that armor got dented today because inflation is not dropping as fast as we would like. But here's the one thing I really want to show you. It's more so holding. So what I mean by that is just go look at the chart here. This is headline inflation, and this was supposed to have an easier time given that energy has been dropping. But you'll notice it's been now almost 8 months of not printing below 3%. We've had many opportunities say, oh, it's going to do it now. It's going to do it now. Okay, it's coming back up. We're worried. Okay, it's coming back down. It's going to break it. And it never has broken this 3% level. The same thing is said for core. Both of them, when you go see them on the year over year, yeah, the chart is still going down, but when it starts getting sticky, we just got below 4 on core, but if headline can't even get below 3, this is what is really kind of changing the story here, because remember what Powell said, if it holds around these levels, this is just going to burn more time on the clock as far as when you're going to get rate cuts or easier policy, and then that means you are, in fact, going to have to live higher for longer, and that's what a lot of people were bringing up today. So this was the big narrative around it. Again, there was a lot of even politics mixed in with it, but the fact of the matter is the narrative behind fast rate cuts and inflation coming down, supporting all these narratives, really got called into question. And like I told you, this will be important for a little bit. Eventually, this is going to fade because now all eyes are on the next set of data. And now that relates into tomorrow. It goes well beyond tomorrow. Be on the lookout for the other CPIs as well as the next jobs report. And then as we wrap up earnings, but really any major economic data, speeches from the Fed, those are going to be the big movers. But now also anything related to inflation and pricing. So tomorrow we get the PPI. That is going to be important. And you have two PPIs this week. You have one coming out tomorrow. That's the final reading for December. And then on Friday, both of these are going to be in the morning before the bell. Friday, you're going to get another PPI, and that is the preliminary for January. So you're going to get two of these reports, but here's the simplicity of all of it. They're both related to pricing, producer prices, inflation, and now they hold much more significance given that everybody is thinking about, well, how is inflation? How is this going to factor into so-and-so narrative? So it's quite simple for tomorrow. A strong reading should probably have the same effect as today. You'll get a strong dollar, weak bonds, weak equities, and you're going to watch more of this pushback and a little bit more worry if price pressures keep coming up. Again, it seems like the market is going off a very short term, and like I'm saying, if the latest piece of news right now is bad news, and then the next thing comes out, bad news, and by bad news we mean inflation coming in hotter, that's going to start changing some things. Otherwise, in the same respect, if PPI comes in lower tomorrow, you may very well see a lot of easing after what we saw today, or maybe that'll even push into next Friday or this Friday with both of those PPIs kind of being wild cards. So keep your eyes out for that. And then finally, before we get into any plays or anything, I think we got to talk about it, man. Pre-earnings massacre. It has been a very smooth earnings season lately. We've got a lot of awesome plays, a lot of post-earnings plays. There has been days where we've missed out on everything, but if you notice the pre-run-up, dude, today was a crash course in dealing with both the earnings that are coming up and the pricing and how stocks move, as well as how the broader market's moving, because today everybody and everything react, and it got in the way of all the earnings. A lot of premiums, didn't matter what was going on, it moved around prices. Premiums got jacked up. You had 90-something% of the market all red today. It had its effect, especially after you have been melting up. So keep this in mind. Thankfully, we are wrapping up earnings, and now as the market is getting sensitive to all this CPI stuff, we're probably going to be focusing on a lot of macroeconomic data and what the data is pointing to in terms of the policy and policy shift. So I hope you're ready. But now, let us get into the plays. So, right off the bat, man, we got a couple of different plays. I took profits on one play today. We actually got a lot of profits on it. I will go over that one. It was a future that I made from around Powell, but earnings, and I'll just start off with another crash course lesson, man. You have had the trauma of all of the earnings. Sometimes it opens up high and low, but well, today you had LYFT. We made a play on it. We grabbed leaps, and we talked about if you went 2 standard deviations at $1.15, you would have been $5 in the money. This would have been another 4,000%er, but it came down. I don't know if the CEO said something or not, but this is one that we're going to be watching tomorrow. But then again, today, after hours, a lot of everything got clapped for the most part. I think the SPY ended up holding a decent amount, but a lot of the earnings, even MGM was a good earnings, Airbnb, they had good earnings, but you didn't really see too many names go up. I think Upstart, they dropped 20%. ACAM, that was another failure. So like I'm saying, there was pre-earnings and even post-earnings massacre, but we'll see if the data turns anything around with some of those. But as far as plays, let me just start with the first one, man. Airbnb. I'm a sucker for love. I never really had the opportunity to use that in a way, but I love Airbnb and I love the earnings, and I decided to make a flip on it. So here's the thing. I think this play is going to be at the mercy of analysts. I plan on swinging this. I grabbed 100 shares after the bell at 150. That was after it hit 167 or something like that, and then it came back down. I figured it's going to move within its range, and that's what I'm saying here. I went for a little dip flip is what you could call it, but I think it's going to price around or move around the level that it was pricing. They were at 150. It was pricing around $30 both ways, so I figured it might be able to make a move to the upside, a little bit more to the downside, but I think either analysts are going to come on board and kill this tomorrow or make this go up. Other than that, I like the earnings and I thought it was good. So I'm down for a little flip swing trade. If this goes up to like 160 even tomorrow, I'm probably going to be out of it on the flip shares, and then obviously holding my long term and everything else that we got on there. So Airbnb, that's play number one. I like it. Then play number two, I actually made this play today, and I don't know why I wanted to grab it here, but the way I was looking at it is that it was finally coming down to its levels. Again, I told you here in the beginning, Russell had a bad day. Well, if you go look at the yen, Russell, and bonds, most of those, all three of those are below their levels from when Powell spoke on December 13th. Even today, Fed futures, that's another play we're going to talk about, that finally fell from when Powell had talked on December 13th and made everything go crazy and even supported this idea of rate cuts and all of that good stuff. So gold is still like right at that level there. So I thought this was interesting. I'm willing to dabble, so I went with two of the micro gold contracts. They are a lot smaller than a big one. They could still move around a couple $100s though, so don't sleep on these too much, but figured I'd go long on there. I went in at like 2,750, so this was a level we were talking about. I do think the dollar and other things will get in the way. The only real way is if there's more fear or rate cuts, but I do think they should hold this level. Although the CPI news was not necessarily the best, I don't think it's enough to kill gold, because again, gold was already at these levels even before everybody started pricing in aggressive rate cuts and all that. So it was just kind of an auxiliary down the road that would benefit gold. So we'll see how this plays out, but I plan on holding this one for a little bit, or if I could get a good flip, I'd be down to get out. But watch out for it, but I'm not like too confident as much as I'm just looking at, hey, I like this price. I think it's going to fluctuate. Maybe it goes a little lower than the 2000s, bounce back up, but I do think it will dance around here, especially depending on the level of volatility that we get. So that's a play that I'm holding now. We made that today, and then finally, the last play, and then remember, we're still going to go over all the earnings. Come there on Friday. We're going to be going, or not Friday, every single day. What am I saying? But we are wrapping up a lot of the earnings here. But this play, and I'm saying watch the earnings, because sometimes these futures, people are like, wait, what's this? What's a ZQ? What's a Zaza? Well, that's what this play is. You guys know the Fed futures, and we're always bringing up, what the probabilities are being priced. You guys go to investing.com, or you could even just search Fed Rate Monitor Tool, and you'll see this. I've showed you these odds many, many times. Well, I had to play on the December futures, the ZQZ24. These are the actual futures when you're going on like /ZQ. That is the one, whatever you use /ZQ, this little letter in between, whether it's H, K, or Z, that's the one I closed out of today. That indicates the date of the month that you're playing it on. Well, this is the actual play on it. So I've gone over this play many times here. I was holding this ever since Powell. I was down on this play. So literally, I took a big bet on this, and I do this play a lot. That's what I'm saying, is that usually when the Fed futures are like almost pricing in a certainty and there's a lot of data coming on, if you know where the floor's at, aka the Fed futures are pricing in 99% odds, I'm down to take that 1% to the floor. Yeah, you could lose a little bit, or maybe the outcome isn't guaranteed or it shouldn't happen, but if it does reverse expectations, you can make a lot of money. So I did this on the day of the Fed because the market was pricing in so many rate cuts. I didn't think that would happen. I was wrong, and then even though the Fed priced in some rate cuts and not as much as it was before, that's why I shorted the level. Even the level I shorted was more than what the Fed was pricing in, but that went against me for a little bit, and I had to hold it. I was down like $9,000 on this play, and then it finally came back down today, now that we priced out a little bit more of those December cuts, and then I closed out. But here's the play idea that I'm saying is that, yeah, I got out of that play. It was cool. We made a nice profit on it, but keep this in mind now for the upside on the March rate cut odds and even the May odds. So that's ZQH24. I think I already got rid of it. And then ZQK24. This is March. This one is May. But the whole idea here is anytime, if at any point inflation gets bad and then we start freaking out again and people price in only 1% chance of a rate cut in March or May, I would be down to throw plays on these, because like I'm saying, yeah, you may buy it if you're wrong and the expected thing happens there. You'll lose literally like 1% of the value. You could determine it. It's all dependent on size. Again, my play, I was down $9,000 because I bought a ton of them because I was already near the floor. I figured, hey, if the market's pricing this as a 90-something% certainty, there's only so much I could lose on the play. But then again, small increments, that play cost me a lot. But then eventually, even today, we were able to make a lot of money. got out of it real quick there. But the general idea here is that you should know the risk to reward, but if the odds ever skew to one level greatly, I'm always down to make that play on there. So you could control it, your level of risk, depending on the size. But I would watch out for this. It's something we brought up. Next time I do it, I will definitely make a play. But just wanted you guys to keep that in mind because it does follow along with everything that we dealt with today, because you did watch rate cut expectations and volatility, and now people factoring in this data. You're seeing all of this stuff come back again, and it's all really the same story over the last couple of months. So watch out for all of that. But as far as everything else, I did make a couple of plays. I grabbed those 100 shares of Airbnb after hours. Oh, I thought I got in at 150. I got in at 151. Oh, so I got double scammed on that, but then I guess I was $1 higher. Then I sold out of my Upstart. I made a play on that because they were pricing in like 50% in the morning. So I said I'll grab one play at 86 cents, flip it by the end of the day. We were up on it for a little bit, came down, ended up losing like $20 on that. I was going to sell, or I was going to buy protection on cart, but I didn't get filled on there, so I said screw it. And then I did make a play on Sony for tomorrow morning. This is 2 standard deviations, or I think a little further. Grab the March call for 115. I did this on a couple plays, even LYFT. If I saw a certain pricing, instead of spending that much for what the stock was pricing, I went and got more time. Did that on Sony, but I did go a little further. Only spent $20, then we spent $16 on Kraft Heinz for both ways on earnings. And then I did a CME. Did I only do the upside on that? No, I went both ways for $60. That one wasn't pricing in a lot, but they moved like 7 or 8% on their earnings, so I like that. That's going to be for the morning. And then we did one play upside on Zillow, upside on LYFT. That play hit for a second, and then pre-earnings, getting ahead of this. This one's in a couple of weeks. This is a pre-earnings play. I decided to go at 2 Celsius March 85 calls for 32 cents. And the logic here too, I grabbed 2 of them. So the idea would be their earnings are in a couple of weeks. A lot of the drink names, even Coca-Cola, they did very well today. They were kind of running up while the market was red. I figured they could be in their own little world, and then if it does have the run up, sell one of them, make it free, and then we'll get a 2 standard deviation play for free. I do believe 85 is a little further than 2 standard deviations though, so it's still getting a good deal while they're there. But if it does also change there, that's the key that we learned today. It could be pricing in $10, $20 from today, but get 2 weeks from now, where's that? It could still price in the same, but then the stock might be $10, $20 further from where it's at. So watch out for that. And then I sold out of Take-Two and Gilead today. These are earnings plays. They were both up a little. I think Take-Two went up 100, and then Gilead just came back to where I paid out. But I got it back like, $90 or $89. So lower some of the initial investments we outlaid. Again, today we only spent like $100 on plays. So get some back there, especially add that with some of the other profits. Then we made the Upstart, and then I opened up this morning with Marriott. I went for a continuation play. I didn't think their earnings were that bad, and I figured that they dropped 5%. They would price in back to where they were at there. It was going for 40. Bought those right off the bat. It didn't have the quick move, and then those faded right off the morning, so lost on the post earnings, but we didn't have to play the pre. So other than that, no other plays. Just going to do the earnings rundown tomorrow. Hold in some of these other futures. We'll see. I'm still in a bond play that's getting destroyed, but going to be riding that out. Want to see how some of this data on PPI plays out. And then if the market does take a shift, we'll see where it takes us and be in the game and even have some earnings on the side. But Chad, that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need y'all to remember personal leadership. That's what's going to take you anywhere. You give yourself the authority to do whatever you want. You could do it right now. You don't need someone to make you a manager, to give you a title, to make you king, to live like king, to act like, oh, stop it. Stop it, Chad. I hope they feel me, but I love you. Drink that water. Stay hydrated. Stay healthy. I will see you in the AM and horn.